Hello and welcome to Gold and Silver Assets. It's Sunday the 8th of March 2020. So many of you will be very pleased to know that I finally managed to work out how to get my video showing on full screen, and so that should significantly improve your viewing experience. Yay! So gold continues to be the king of bouncing back, and yet silver and the miners are still holding back, and that does make me feel a little bit suspicious. I'd like to start by recapping on my personal strategy. So I tend to work on the longer time frames, and I'm looking for good buying opportunities in what I believe is the early stages of a bull market in the precious metals. So if you're looking at trading signals for trading within a few days or even within a few weeks, then the type of analysis that I'm presenting is just not going to work for you. It's very common in the world of trading to hear, particularly among beginners and inexperienced traders, about how so-and-so was wrong, they made the wrong call, and so on. But actually, I don't think it's as black and white as being right or wrong. What might work for one person's trading won't necessarily work for someone else if they're using different strategies in different time frames. And at the end of the day, it's the numbers within the trading account that do the talking. So let's start by looking at the gold volatility index, or GVZ is the ticker symbol for that, and this is on the weekly scale. And of course we've had a very volatile time recently. I've compared the volatility to the actual gold price, which is the orange line. And for me, I tend to find that the best times to do my buying are when volatility is low. So for example, here, when we had this dip here, volatility was pretty low, and then of course it shot up after that, as did the price. And again, similarly here, when prices dipped, volatility was low. So the other thing that I do like to use is a combination of low volatility and a low RSI, at least below 50, but of course the lower the better. So as I said, volatility has recently jumped pretty high along with the gold price, and so for me this doesn't look like a great buying opportunity. That doesn't mean that gold can't steam up higher. It certainly could do that, but for me this doesn't really work with my strategy. Let's move on to gold in US dollars on the daily scale. In last week's video I did mention that if price goes above this channel line, then this line could act as support potentially, and so far it's actually done that. So price shot up above the channel line and retested it, and went up again. Now the last trading session was very volatile. We had a $40 range in that just in that day alone, but of course we've got this candlestick which looks a bit like this, and that does signal some indecision. Now of course we remain in an uptrend, and so we must assume that we will continue in an uptrend until we see something that tells us otherwise. So we've got higher highs, and again we reached a new high in the last trading session, and we've also got higher lows here. So you can't buck against momentum. What would worry me and change the ideas about where price is going would be if price went below 1634. That would be a cause for concern, and we would be back in this channel here. So this is the level that we're going to need to watch here. Moving to gold in US dollars on the weekly scale, we can see that the bearish divergence continues. So although we're getting higher highs in price, we're actually getting lower highs on the RSI. And I previously drew this upward sloping trend line here, and it's retested this a couple of times, but it's just, even though we had a big green candle in price, this is just struggling over here. Now, one thing that can sometimes happen is that this bearish divergence can be negated. So if we get a big move up over here, then the RSI can go up further. But remember, we haven't got a lot of headroom left over here. And the other problem is that we do have a lot of overhead resistance in terms of price dating back from 9 years ago. The other thing to note is that on the monthly chart, which I haven't shown here, the RSI is in the overbought levels as well. And so I'm just a bit reluctant to say that we're going to steam ahead and we're going up to 1900. I don't think it's going to be a straightforward run if that is the case. And let's have a look at the Commitment of Traders report. And this is a 20-year chart. At the top here we have the gold price in US dollars, and at the bottom we have the open interest. So the green here shows the large speculators, so that's particularly large hedge funds, and in red here is the commercials, and so that's usually the big banks and the big miners. And we can see that the total open interest is at all-time highs here, and it's just been gradually rising over time. So looking back, where were the best buying opportunities? If we look here, I found that when the total open interest is less than 100,000 contracts on either side, those are usually good times to buy. So again, we have dips here. But then if you use that, I mean, you could say that, you know, this was a good opportunity here in 2009. And of course, it had reached less than 100,000 contracts at that point. But of course, then it reached a new all-time high over here. And so, you know, if you held off buying, you'd have missed this whole move over here, because open interest didn't really fall a lot until 2013, really. So could that be the kind of situation that we're in now? Are we just at the beginning of a big move here? I would say that the situation at the moment is very different to the situation we were in from 2009 to 2012, really. And the difference here is that over this time, the stock market was recovering and actually did well over this time period. Whereas at the moment we've got significant weakness in the stock market, and of course the times at the moment seem much more unstable than what we were seeing over this time period. And it's because there are so many factors at play that make the Commitment of Traders reports actually quite difficult to read. Is it simply a straightforward battle between the hedge funds and the big banks? And if so, is it correct to think that, you know, that the big banks are likely to win because, of course, they have their backs covered, and the hedge funds can be quite vulnerable? And certainly historically, the commercials have been on the correct side of the trade. And if that's the case, then again, that would suggest that this is not really a buying opportunity at the moment, and what we'd be looking for is for contracts to drop down, and that would be when you would want to buy. But who knows whether that's going to happen. There are some that say that the banks actually have positions that are labelled as the large specs, and so, you know, they could actually be on both sides of these trades. There are some also that suggest that the commercials are actually in the process of losing control. Who knows what's going on here? I just think it's not something that us retailers will ever really understand or know. But overall, I'm just reluctant to be buying when open interest is at record highs, so I'm happy just to sit and watch and see what happens for now. Last week we covered the gold to silver ratio chart, so this is on the weekly scale, and we had drawn this channel, and this channel was drawn by connecting the multiple lows at the bottom here and cloning that line and moving it up to fit the highs. And so if this channel is correct, then we do have some potential headroom. It doesn't mean it's going to necessarily hit the top of the channel, but that is a potential outcome there. If we zoom in onto the gold silver ratio on the 4-hourly scale, it actually looks like we've got what might be a flagpole with a flag, and we've broken out of that. which suggests that we could well hit a ratio of at least 99. It might even poke out of the channel before coming down. And that upwards movement in the gold-silver ratio would indicate underperformance of silver. And that's not a sign we normally see in a full-blown bull market. This is the chart of silver in US dollars on the daily scale. And we've drawn this channel here again by joining the lows, cloning it, and then joining the highs. We previously saw this, what turned out to be a false breakout upwards. Price then just dived straight down and was slapped down hugely. And last week we saw a bounce back. But interestingly, the bounce back was stopped by overhead resistance formed by this upward sloping trend line. And so it's hit that a couple of times, but just not been able to break through it. And that's rather suspicious. Gold, of course, exceeded its previous high, whereas silver is again nowhere near that. And so that failure to bounce back does make me very suspicious. I would only start to get excited about upwards moves if the price got above this trend line and used that as a support, and then subsequently it would have to break above the $18.30 level. The big line, of course, that we're looking for is around the 1930 level. Any move above there is going to be massive. I'd get really excited when silver goes above that. I just think it's a little bit early at the moment, but it's coming, so let's keep a watch out for that. Down below, we've got support levels on the lower part of this channel, and my line in the sand further down is at around the $14.80 level. It might sometimes briefly breach that, but I think that's just going to provide strong support there. What about the miners? Well, let's start with the GDX on the weekly scale. And we seem to, in the long term, have been forming this ascending triangle, in which case I would like to see another retest of the lower part of this triangle before we move up. The upper resistance level of this triangle is actually formed by a gap which occurred here in 2013. The other thing to note here is that we've still got bearish divergence here. So again, price went higher here, and yet there's significant bearishness here. We've also got this upsloping RSI trend line, which has been retested a few times, but it just hasn't breached it, and it looks like we're back on the way down, which again is a sign of caution on the GDX on the weekly scale. And if we look at the GDX on the daily scale, of course, we had this massive drop along with that slap down in the gold and silver prices. And in fact, there was a big gap down over here. But prices bounced back relatively strongly. And, you know, it was something like a 13% rise in the levels here. And that got a lot of people excited about the comeback. And this is just the start of a larger leg up. But my feeling is that this was merely a gap-filling exercise. And on the last trading day, the miners underperformed gold. So you remember we had a green candle and price had moved up. So this underperformance is a little bit of a concern, and particularly if we get more weakness coming in the stock market, which I think we may well have, then miners are likely to be affected by that. And finally, let's look at the HUI to gold ratio. So this basically tells us about how gold and the miners perform relative to each other. And so any upwards move in this chart shows that the miners outperform gold to the upside, and downwards suggests a underperformance. So this chart actually illustrates again why I'm just a bit suspicious about the recent moves in gold. So if we look back in the move in 2016, the miners outperformed gold quite a lot. So over this time, gold had increased by about 30%, whereas the miners had increased by 140%. So that's an amazing outperformance there. In contrast, the move from September 2018 to the present day, gold increased by 40%, whereas the miners only increased by about 80%. So those moves it just doesn't match what we saw in 2016. We're also again seeing a break in this RSI line, which again tells me that we're going to get some underperformance of the miners. So just as a reminder, the analysis that I'm talking about looks at charts on the monthly and weekly scales, and so as a result some of the moves that I'm talking about will take weeks or sometimes months to play out, and we will see volatility along the way. Now, some of you may not like the thought of gold price and silver price going down, but it's all a matter of perspective, and in the big picture I think we've got some big moves coming up ahead, and any drop in the gold price is just a buying opportunity. So thanks for listening, and don't forget to like and subscribe. See you next week. Bye.